Well, good afternoon, and thank you for taking the time to join us for this webinar that's going to focus around the impact that COVID-19 has had on the banking industry. My name is Cesar Rivas. I am the National Sales Executive for Sound Payments Banking Technology Solutions. Um, today, I'll be presenting the obvious challenges caused by the current situation, and we'll look at some of the problems that you may have already considered or may not have already considered. After sharing that information, we're going to go through a number of suggestions on how to overcome the situation and how to leverage multiple resources that you possibly already have access to, or you can make available for your institution, along with a brief presentation of our solutions. We also want to look at short-term measures to mitigate the crisis and long-term suggestions, just to position ourselves, our industry, in a better place in case a future pandemic or crisis should arise. I will be unmuting everybody at the end of the presentation for any questions that you may have. Sound Payments is a diversified technology solutions provider. We're headquartered in Jacksonville, Florida, and we create products and services for commerce, the petroleum industry, and of course, the financial services industry. Our company was founded by our president, Andrew Russell. He was in banking for over 20 years, the senior leadership positions for institutions of really all sizes and types, everything from a large bank, large commercial bank, to a community bank, to credit unions. As far as myself, my background, I have had extensive career in banking, but also had a career in technology, a background in technology. So as I'm sure everyone has realized, technology has played an important role in somewhat mitigating the severe impact of the current situation. Just imagine if online banking or smartphones or streaming video it didn't exist. But first and foremost, allow me to discuss the concept of change. This is a time of change. As we know, but change is constant. It's an irony, really, when you think about it, that the most consistent aspect of our lives is possibly the fact that everything is always changing, evolving. Now, when I think of this concept, I categorize change into two primary areas: gradual change versus abrupt change, what I refer to as evolution versus revolution. Of course, in the first case, change is much more manageable. It allows the possibility of adaptation with usually minimal to no disruption. And usually this adaptation is based just on small and gradual changes to the environment that surrounds us, thus creating evolution. And I'm not referring only to nature, but even multiple aspects of our lives. Think about as we go through our professional life and we have income gains, how that changes maybe the way that we live our lives, the way that we do our shopping. All right, as we develop personal relationships with significant others, same thing. How do we treat each other? Even when you go through life and you educate yourself, how your view of life may change. Now, in contrast, abrupt change is usually highly disruptive, um, and making the necessary adaptations with significant disruption to the status quo. It was Mary Shelley, the author of Frankenstein. She said, "Nothing is so painful to the human mind as a great and sudden change." And that's where we are at this time. We're attempting to overcome and adapt ourselves to sudden and unexpected change. Now, when analyzing abrupt or gradual change, I also look at what's driving change or its origin, whether it's something done by design or due to external factors. So think about the changes that we've experienced in the banking industry in the last few decades. Some changes were driven by the industry itself in order to improve efficiency. So think about, for example, going from reactive sales to retail sales model, or online and mobile banking, or ATMs, right? Both of these solutions are were gradual changes, but they were driven internally. Then there's been changes that took place due to external factors like regulatory changes, such as overdraft protection rules, or CD rates increasing significantly due to certain deposit losses, like it happened in the financial crisis of '08. So even though abrupt changes tend to align with external factors, and gradual changes may be internal in a significant number of circumstances, the reality is that the speed and cost of changes could be a mixture either way. Now, um, as we look at what we've it's been a few months, let's say, since the initial impact of the virus on the world. I predict that one of the longest lasting impacts of the crisis is probably going to have to do with infectious disease protocols, how to live our lives, limiting physical social interactions. I think technology had already affected physical social interaction to some extent, just due to the creation of some sort of a virtual society, right? Or maybe even some basic aspects of our daily life have been modified, like shopping or entertainment, just due to progress, right? And it's funny how up until a few months ago, technology was a concern for older generations. Some claim that it was isolating humans and doing away with established social norms. And currently, the same technology seems to be playing a sort of salvation. Can you imagine if we would have been exposed to this pandemic during the 70s or 80s with no capability to video chat, no possibility of shopping online, no video streaming, no tweeting, what would have been the impact back then? So just like technology has played its role in making it more bearable to self-isolate, it may also play a vital role in adapting new business models to the reality of social distancing. So experts are saying, they're warning us about a second wave of the virus coming this fall. We're already in the fall, so they're saying around October. Now it's the time to think ahead and prepare businesses for what's coming. Now, in the banking industry, the virtual institutions, the ones that don't have brick and mortar operations, are probably be the ones to benefit the most with this new normal, since they possess a business model that's well equipped to adapt to this reality. So it's imperative that traditional institutions adopt some of the practices of their virtual competitors while figuring out how the human interaction component of their business model can be modified to adhere to the new social norms. Banks are going to need to get creative in order to offer a personal touch in the way they service their clients while limiting the actual touch points. So we can already observe that technology is one of the most important components to accomplish this new shift in the traditional banking model. But is technology deployment the only or primary challenge banks will face? Not necessarily. I mean, an important element to consider is the fact that several commercial banks were moving towards a more personalized branch environment where frontline bankers met with customers through pre-established appointments. So now banks will need to figure out a way their clients can still see a friendly face while they're inquiring about their accounts and services, even as they limit the actual in-person interaction. The bottom line is that the external factors are impacting our currently established norms in most facets of our lives, and it's going to be our ability to adapt that's going to help us get through the storm. You got to recognize the challenges ahead and form a visionary strategy that's of utmost importance if the businesses are going to survive. So one of the most fundamental components of our civilization, what allowed the world to become what it is that we know nowadays, is a monetary or financial system, our economy. And the most closely related industry is banking. So banking is unavoidably impacted anytime the economy is affected. Even if the crisis is not directly created due to our financial services industry, like we saw in 2008, if other industries are negatively impacted, the banking system is going to suffer. I mean, consider some of the sectors outlined in that slide. How many employees who have bank accounts, loans, and other financial services are impacted by the current pandemic? How many credit card transactions are purged due to the crisis, people spending less? And how much does that represent in interchange fees that are going to be wiped out? So even if the disruption is temporary, it's going to be so significant that the negative impact cannot be avoided. So in this slide, you can see the impact of this crisis on two critical areas of banking. First, tier one capital ratio. Even though we are very well prepared in contrast with the financial crisis of '08, it's still going to put us a strain on banks. I mean, liquidity and profitability are going to be impacted by both non-performing assets and a loss in revenue due to the current situation. The estimate is that mortgage delinquencies are going to reach levels comparable to the crisis of '08, And again, banks are better capitalized now than back then. So we are in a better position, but it's critical to take measures to avoid as much negative impact as possible. So again, here in the US, the financial system took measures to lessen the impact of non-performing assets after the last crisis, but unfortunately, it was difficult to forecast the situation that we're experiencing today. So we will see some strain in this area affect our financial system for certain. So before we, looking at specific types of transactions or interactions that are going to be mostly affected by the crisis, consider the impact this crisis could have on the use of paper currency. So there's serious concern about how surface contact could help this virus or many others spread. And it's popular knowledge that the money is dirty in the sense that it carries a lot of germs. I'm sure you've heard stories about traces of germs found on bills. So this pre-existing perception is possibly going to increase concern over the handling of money to the point that it could ultimately affect the popularity of using currency going forward. Maybe businesses who've resisted accepting other forms of payment besides cash may become more open to change. So looking at specific transactions that are going to be affected by the current crisis, I think deposits, specifically in-person teletransactions, because ATM deposits can still be challenging for businesses, especially cash and check heavy businesses. And a night drop is not always the preferred solution for many of these businesses. So another issue in terms of deposits is going to be third-party deposits. A tenant depositing in their landlord's account, for example. So, and then we got to take into consideration account government reporting for deposits, such as CTRs, if we limit live in-person interactions. Withdrawals is probably going to be another type of transaction that should be considered. Specifically, again, cash withdrawals, given the limited amounts of that ATMs can provide, along with a specific change. Now, we do see a reduction of the utilization of currency, and maybe this is not going to be such an impact. Cash advances are also going to be another impact, since self-service or remote advances are limited. And then official checks have always required a personal interaction in the past. And then, of course, there are going to be clients who may not be technologically inclined that use the branches to conduct transfers between accounts and things like that. And of course, account maintenance requests traditionally involve interaction with frontline bankers. So things like adding or removing authorized signers, wire transfers, even travel notifications, and most banks are required to be done in person. I've seen some banks move to a drive-through model to conduct many of these transactions, which I think is a move in the right direction. And of course, new account openings, loan applications, and signings and closings are done in person at most traditional banks anyway. So I've seen banks also give lobby access to clients by appointment only. So maybe that's also a good way to mitigate that challenge. Now, let's consider the internal impact of this crisis and the future changes that would need to go into effect. The first area that comes to mind, of course, is human resources. Will there need to be reduction in staff size due to automation and change in internal procedures? Or will there be a possibility of reassigning jobs to support areas that will increase in demand, such as, let's say, telephone banking? Technology will also need to be ramped up, especially for many community banks and credit unions that don't offer the same options that some commercial banks and online banks do. And also with the increase of remote or self-service delivery channels, will traditional banks need a number of brick and mortar locations that they now have available? Facilities usually constitute an important portion of the total overhead expenses. So are they going to need that many buildings? And then finally, for me, the biggest risk comes in client-seeking institutions that can provide them with all the financial services and products in a safe manner. So again, especially those institutions that need to ramp up their technology, you're going to need to keep an eye on client attrition if you're unable to fulfill your clients' needs. Now, determining what available resources can help mitigate the impact of this pandemic, telephone banking, ATMs and kiosks, And online and mobile banking are the primary delivery channels that can provide clients with the services they need while maintaining everyone safe. These are going to be our primary tools that hopefully can help the industry. I personally see the need to expand features with these resources in a lot of cases if they're going to be utilized in greater proportion than currently, with the purpose of reducing the need to meet with a banker in person. Now, this is where our solutions come in. As we look into the future, we realize that technology will be the most impactful in the financial services industry by creating convenience for the client, while at the same time generating revenue or cutting costs for the banks. And it's coincidentally, and under the current circumstances, much of this technology can also increase safety for both the clients and the staff by providing tools that make it easier to comply with the new social distancing, while at the same time providing many of the core services that this industry offers. So the two main areas of focus for this new normal will be around remote banking and branch automation. These two areas will limit the need for clients to interact directly with bank staff, keeping both parties safer. And I'd like to point out that since we develop and implement our banking technology solutions, we are able to customize them to fit the specific business needs and follow policies or regulations required for each potential customer. So I'd like to present our technology solutions that would be able to support efforts to everyone to overcome the current challenges. So I'll start with remote banking. This is an area where we saw the biggest opportunity. If any of you hold accounts at local banks or credit unions, you may find in some cases reduced functionality to maybe their online or their mobile banking platforms. Usually, the main cost of this is that these institutions of smaller size need to rely on external vendors to provide the technology. So they usually will receive their vendor will provide them with a core system and an online banking system that has some functionality, but the ability to upsell them with additional features. All right. So in the case of our platform, it's actually provided with multiple languages, both consumer and business versions, and it's got all the features right off the bat. So there's no upsell version of it. It can provide a wide number of options for transferring funds, from internal account transfers to ACH to external transfers, wires, both domestic and international, even an option to contribute with charitable organizations. It also includes the ability to pay bills, and our version allows you to scan the bill. The system does the rest. Also, our online banking system allows clients to make remote deposits, both on the mobile or online banking platforms. And on the business side, remote deposit is compatible with high-speed scanners, so they can do some bulk check deposits as well. You're also able to process stop payments, whether for single checks or a range of checks. They can easily manage their cards, both credit and debit. You can view transactions, activate new cards, suspend, cancel cards, even establish daily spending limits to meet your needs. So this is a client who's got a fleet of vehicles and they have multiple drivers. They can actually manage each car that those drivers hold in terms of limiting their daily spending and so forth. And our system connects with current check providers, so they can reorder their checks right from online. On the business side, clients can use this to process their payroll, to pay their employees using a direct deposit. It doesn't calculate the amounts for you, but it does. You can input your employees' names with their bank information, and then just input the amount to deposit, and they can receive it there. And it's got multiple options in terms of support, online, email, text messaging, and so forth. All right. Now, in those instances that a client cannot fulfill their banking needs remotely, we can offer a self-service solution that's going to replicate the transactions of a live teller, while again following social distancing guidelines. So our lobby kiosk is considerably smaller than most ATMs and kiosks in the market, but it's packed with all the hardware to provide the functions of a full service teller. It's built with carbon fiber composite alloys, so it's 3 times stronger than metal, but only a third of the weight. And then our sign-on process provides clients with a number of options besides your typical debit card, even biometric sign-on. So it provides a greater degree of flexibility and a higher level of security that any institution desires. In addition to your typical ATM functions, this solution can process a number of other transactions that really make it unique in the industry, a very unique device in the industry. It's one of the few devices that can issue official checks and process cash advances from lines of credit and credit cards. The machine can dispense up to 8 different currency denominations, so clients can request a specific mix of bills when processing a withdrawal. It comes equipped with a bulk bill counter with counterfeit detection and can recycle any cash deposited. And the maintenance is extremely easy since there's no need to remove the currency cartridges. Currency can simply be refilled through the bulk currency slot. And because these devices can be remotely managed from a centralized location, operations will know exactly when to fill the currency and what denominations are necessary. Let's move on to branch automation, where I will highlight 2 solutions we currently offer. First, our Telecash Recycler. So this is a machine that assists live tellers in the handling of cash. Withdrawals and deposits of currency are handled by this device. It saves time and really reduces losses by providing accuracy and security. It can be connected to multiple teller stations. Your typical layout is 2 tellers per Telecash Recycler. It can even track serial numbers, so the bank can identify who deposited specific currency. And just like with our lobby kiosk, maintenance is extremely simplified, and the TCR is equipped with a vault. The other device to provide branch automation is our teller window kiosk. And this device is meant to reduce transaction time by allowing the client to identify itself or themselves rather with ease. It even offers biometric login for facial recognition, which would virtually eliminate the possibility of fraud by impersonators. But there's also the option of clients identifying themselves by using a debit card and PIN. Now, I bring up the facial recognition feature because this can also improve the client experience. And one of the biggest challenges that tellers face at branches regarding customer service is the need to KYC longtime customers. Sometimes these clients become irate because they're not recognized, but with the nature of a job of a teller and just rotation, turnover, it's difficult to have tellers at the branches who recognize every single longtime customer. So this device can provide the ability for tellers to call clients by their name when they walk up to their window. It can also be used to initiate a cash advance and also to type in sensitive information like a social security number or discuss dollar amounts, which can be uncomfortable for a client that's standing next to someone else at the teller line. And then finally, I want to present you with our solution, a solution that can be useful, especially in these times, our Cash Vault. This is a device that's installed at retail locations like supermarkets or gas stations, pharmacies, convenience stores, and it's offered to business clients of a bank. So it enables them to deposit currency into these vaults at their place of business and obtain immediate credit in their accounts. This way, their establishments are safeguarded against theft or losses, and the need to send employees to the bank to make deposits is eliminated. So it's a service banks can offer their business clients. It creates convenience and security for them while reducing foot traffic and the handling of cash at the branch. And clients can be offered the option of providing armored car services, which generates additional revenue stream for each institution. And these vaults are equipped with rapid currency counters and counterfeit detection, so it protects the bank from any losses. So I want to go back to sharing with you some short-term and long-term suggestions in the next few slides, but first want to highlight overall recommendations to summarize much of what I've presented. So expansion of both remote and self-service options is going to be based on what you already have in place. A lot of technology already exists, but how to implement it to accomplish your goals is going to be key. So client interaction is also going to be critical. You want to leverage technology, as I mentioned previously, but you also want to listen to your customer base and on how they prefer to do their banking going forward. And due to the risk of handling cash that it represents nowadays, devise ways to reduce touch points with currency for both clients and staff. So let's take a look at the possible areas where we will see future impact. Nobody can be completely confident what will occur in the next wave, but now is the time to prepare. The reality is that banks need to work on repositioning themselves to keep the lights on while at the same time recalibrating for what is to come. Social norms may permanently change, But that's not even a given, right? Humanity tends to forgive and forget quickly. The new normal, or there could be a cure that reduces death rates significantly. So we've already observed an impact on mental health. But as I mentioned earlier, the ultimate mindset of the masses is up in the air. And it would be safe to assume that with certainty, this crisis will create permanent change to businesses in all, if not most industries. So it is in your power to determine what those changes will look like. No easy task. So we first suggest focusing on a short-term action plan to ensure the survival of your institution by taking the following steps. Find ways to trim costs quickly, while at the same time reset your revenue outlook. Most banks will see their liquidity buffers come under pressure in the coming weeks or months, as I covered previously. And this could prompt some difficult balance sheet decisions. So forecast your lost net interest income. Also, focus your business continuity plans on issues for survival. Areas such as customer retention are going to be critical, which brings us to the next point. Provide customer relief and remediation temporarily, perhaps offering no credit bureau impact for a period of 30 to 90 days. Manage customer perception, brand image, and commitment to the local community. Proactively reach out to their clients as much as possible. You may have some people with downtime now at the branches. Then finally, create a long-term action plan to tackle not only consequences created by the current crisis, but also you want to prepare for other unforeseen challenges in the future. And the first bullet point may seem obvious, but you need to remind yourselves of this. Things like validating long-standing business assumptions, reprioritize capital allocation plans, rethink what drives loyalty. Now, I'd also advise you also rethink your balance sheet challenges while managing loan stress and customer sensitivity. And then your current staffing level and compensation model may not be appropriate given some fee revenue has declined sharply, and maybe some workloads may shift from branches to contact centers. Maybe consider changing incentive to drive branch traffic to the digital channels. And then reconstructing your resiliency plan. Go beyond just preventing threats and consider being prepared to operate during periods of massive social disruption. So with that, brings us to the end of the presentation. I want to thank everybody for participating today and look forward to your participation in the future. Thank you.